Good morning, investors. Welcome to another TipRanks webinar. Happy Wednesday. For those of you who are just joining us on your very first TipRanks webinar, I'd like to personally welcome you here. My name is Ari Gutman. I'm a customer success manager here at TipRanks. I have the honor and the privilege of jumping on with our community members like yourselves every week, whether that be on Mondays with our premium and ultimate users or on Wednesday with all of you. Now, without further ado, I want to kickstart us into what exactly we do on these webinars. And that is essentially we go over the economic backdrop. We talk a little bit about what happened last week, what's happening right now, what we could expect in the remainder of the week and moving forward for the months to come. And then we jump right into either a brand new TipRanks tool that has recently rolled out, or if that is not the case, we dive into a featured tool of the week, a tool that perhaps could help us right now during our uncertain, trying economic times. So with that out of the way, I want to dive right into essentially what has been going on within the market as of late. Now, just if we blocked out last week and we just kind of start fresh this week, this is how I started with our premium and ultimate users as well this week. We already have a lot going on that was on our agenda, economically speaking, this week. So let's just paint a brand new, fresh canvas for ourselves here. And on Monday, we had the factory orders come out, which dipped a little bit. And then we had on Tuesday, a consumer credit report that came out, and that actually was up slightly. On top of that, yesterday, Tuesday, we also had Jerome Powell speaking before Congress and essentially sharing the updates on where the Federal Reserve stands and what they're thinking about not only inflation, but how they're going to combat inflation moving forward, their plan of attack, if you will. Now, yesterday, I'm sure you are all well aware, the stock market was in red. It really slid after Powell began to speak. And I am typically listening in pretty closely to when Powell speaks or any Federal Reserve officials speak, because they're really at the front end here of fighting inflation. And they're not playing poker with us, as I say, webinar to webinar. They're usually giving us exactly what they're going to be doing. And so when they speak, I listen in, because if we were to listen in to what Powell had shared yesterday with the Senate Banking Committee, he actually shared something that was incredibly important for all of us to note, which was he is actually going to move forward with interest rate hikes. And he shared with us that we could actually see higher than previously anticipated interest rate hikes. But I don't want you to take that just from me, because I'm the TipRanks guy in front of all of you on the screen. I want to share my screen with you now and actually play just a snippet of the clip that I have here.
I'm not trying to trick you. You're raising interest rates. You're raising interest rates to slow the economy, are you not?
Yes, to cool the economy off.
And one of the ways you measure your success, other than fluctuation in gross domestic product, is the unemployment rate. Is it not?
Yes, one of the measures.
Okay. So in effect, I'm not being critical. When you're slowing the economy, you're trying to put people out of work. That's your job, is it not?
Not really. We're trying to restore price stability.
No, you're trying to raise
not wages.
You're trying to raise the unemployment rate.
There are a lot of
that means, I know you don't like the phrase, so let me strike it. You're trying to raise the unemployment rate, aren't you not?
No, we're not trying to raise it. We're trying to realign supply and demand, which could happen through a bunch of channels. Like, for example, just job openings.
All right, let me put it another way, okay? The Economist did a wonderful study. They looked at 10 disinflationary periods in America going all the way back to the 1950s. Disinflation is what you're trying to do. It's a slowing in the rate of inflation. Am I right?
Yes.
In other words, prices don't go down, they just don't go up as fast. Deflation is when prices actually go down. You're trying to achieve disinflation, are you not?
Yes, we are.
Okay. Based on history, in the 10 times that we got inflation down, disinflation since the 1950s, in order to reduce inflation by 2%, unemployment had to go up 3.6%. Now that's history, is it not?
I don't have the numbers in front of me, but yes, the standard has been that there have been recessions and downturns when the
Okay.
Fed has tried to reduce inflation.
Now, right now, the current inflation rate 6.4% and the current unemployment rate is 3.4%. Now, if history is right, I'm not asking you to again blame anybody, but if history is right, unless you get some help, in order to get inflation down from 6.4% to, let's say, 4.4%, and the unemployment rate is going to have to rise to 7% based on history.
That's what the record would say.
Okay. And to get inflation down to 2.2% based on history, an immutable fact, unemployment would have to go to 10.6%. Would it not?
No, I wouldn't.
That's what the record shows. That's what the history shows.
Yeah, I don't think that kind of a number is at all in
I
play
mean,
here.
I know you're reluctant to admit it, and you don't want to get in the middle of a policy.
Now, I had shared that clip for two reasons. Number one, that is because Jerome Powell is actually sharing that, yes, increasing interest rates is going to bear some negative impact on all of us. And this negative impact, as we heard from Senator John Kennedy of Louisiana, is essentially that there's going to be some implications when it comes to unemployment. Now, unemployment right now is actually at a 1969 low, historic low here. So a very, very robust labor market. And again, just to double down on this point, what we could expect as the Federal Reserve continues to increase interest rates is that there will be an impact on unemployment. Now, I trust that each one of us out there is in a good position, and hopefully that is the case, where we are not going to be burdened by potentially being hit by unemployment in any sort of sense. However, what I will share with everybody out there is, as investors, as we're looking at this as an investor, how will raising rates impact businesses across sectors? What will be happening? Of course, unemployment will go up, but there's also an implication there then on production. Companies are producing, how much they're producing. And so again, this all is creating an economic environment for investors across the board to really begin to look at what they're investing into. And I'd like to share that this is an opportunity now for us, having the Federal Reserve really speaking to us about what we can expect, to prepare now and do so defensively. As I always say, prepare for the worst and plan for the best. But because the future is unpredictable, and we can only grab sight of the information that we have in front of us, I'd like to say it's always about coming as close to the insiders, those with the most knowledge at their fingertips as possible. That is exactly why I like to listen in to Jerome Powell. And I would expect that right now, I mean, futures are wavering, but I would expect we're going to get another day worth of volatility if Jerome Powell comes out hawkish or more hawkish than yesterday. And perhaps if he comes out dovish, or perhaps the market has already baked in his statements, we could get a slight rise. But that is my prediction for today. If he comes out like he did yesterday and he shares this hawkish sentiment, then we very well can get some more volatility today. However, a big report on the week that's about to come out on Friday is the employment report. And I want to touch upon the employment report for a hot second, because the last employment report that came out, there was an expectation that the employment number was going to come out 187,000 jobs added to the U.S. economy. What ended up happening was we got a report that read 517,000 jobs, so over 500,000 jobs were added to the U.S. economy. That shocked the market. That day we were in red as well. So what could we expect rolling into Friday? Well, based on what Jerome Powell is sharing and what he sees is this really robust labor market, if that report comes out above 225,000 jobs, again, another dose of reality here, a reality check for us investors, that the Fed is going to really move forward pretty aggressively. And so if that number is above 225,000 jobs, again, it's just more of a reason for the Federal Reserve to run with their chess moves in raising interest rates. And what does that ultimately do for us? It puts us in a position as investors to prepare for the worst while planning for the best. And in doing so, I want to talk about today the tools that we have at TipRanks to essentially trade with the insiders. Now, I'm specifically highlighting this tool because the insiders at companies, whether it's C-suite executives or even hedge funds that have the insider knowledge there that are really close to these insiders, they're going to have far more information at their fingertips than say the average retail investor. Now, I'd love to think that I know everything about, X company or Y company, but the reality is there's information that's just not available to the public. And me being a retail investor myself, anytime that a company within my portfolio shares a statement of some sort, I want to know. And so what's interesting to me is on TipRanks, at least talking to a lot of our community members, of course, TipRanks is known for analysts and ranking the best analysts, but very few times do I find a lot of our community members are actually jumping into the tools that I'm about to show you, which is why I wanted to feature them, because heading into such an uncertain year, it really is going to be getting as close to the insiders and is trading with the insiders as we can. That will best help us make wiser investment decisions. So what exactly do I mean? I want to bring us right over to the TipRanks homepage. Bear with me as I share my screen once more. And here we are on the TipRanks homepage. Enlarge this for everyone as well. The very first spot I want to take us is underneath research tools. Now, what TipRanks has done rather recently underneath stock comparisons, we have actually generated preset lists here for everyone to compare stocks. Now, these are really, if you will, the hot stocks that a lot of people are talking about, whether it deals in chat GPT stocks, so really AI stocks here, value stocks, we see airline stocks, we have our AI stocks, oil stocks, bank stocks. But if we dive into any one of these comparison charts, what we get now is the best chat GPT stocks. And I want to go one further here and take everybody to TipRanks Essentials. So it's our second tab. And again, this is a list that is generated here of chat GPT stocks. Now, if we just scroll over here to the right, I want to direct everyone's attention to Insider Strategy Signal and Hedge Fund Signal. Again, for me, it's about getting as much information and knowledge that I possibly can on my table as an investor before making an investment decision. So a lot of the times we'll have investors who hear about a stock idea, whether it's from bloggers out there, I don't know, Motley Fool, Seeking Alpha, could even be a TipRanks article. But you have to do your due diligence. I cannot stress that enough. Every investor must be doing their due diligence. Now, a key aspect of due diligence is trying our best, again, to understand how insiders are trading their stock. So in understanding that we have now these signals under TipRanks Essentials, we can get a very quick glimpse of what these insiders are doing when it's specific, at least in this comparison chart, to chat GPT stocks. But we can now toggle with insider strategy signals. So this is going to be the insiders that are C-suite executives. What are they exactly doing? Now we can go signal by signal. So we can go by the most positive, or flip that around and actually go by the most negative signals. So those would be insiders selling. And once more here to the right, we have hedge fund signals. We can flip from the positive to the negative. Now, if you jump onto any one of these comparison charts, which I'll go again, research tools, stock comparison, and scroll down, we can even jump, just for the sake of today's webinar, again to airline stocks here. We're under TipRanks Essentials. We have our list of stocks, but I want to know the most recent movements inside in terms of insider activity. And so here we are with Insider Strategy Signal. Let's just find out the companies here, when it deals with the airliners, which of them have the most insiders buying. Or if I want to go by hedge fund signals, again, we can do exactly that, which hedge fund signals allow me to do. But it's investing with those who have the most information at their fingertips. And I would assume that investors, let's say hypothetically a C-suite investment team or the C-suite of a company is trading in or out of a position. That is something I 100% want to know about, so I can then paint the best possible picture for myself as an investor. Now, I wanted to show you that pretty briefly because, again, this is a great tool that we have here underneath stock comparison, just to get a quick glimpse of hot stocks that a lot of investors are talking about. We compare them against one another. We do that for everybody here. We can even go to bank stocks, just giving everyone a look at what the comparison tools look like here. but sticking to insider and hedge fund signals for our insiders. However, the tools that I really want to dive into now are more specific to the actual insiders. Now, when I come onto TipRanks every single day, the very first spot I actually go to is underneath calendars, and it's the daily analyst ratings and daily insider trading. Now, I'll be honest with everybody, the very first tab that I'll come to is daily insider trading. Go ahead and give that a click. I get a loaded list of stock opportunities that I'd like to say each one of these stocks that are appearing here on this list are now stock ideas for me, whether or not I should add them to my stock watch list, or perhaps if I see a stock here that is within my portfolio, and let's just say there's a lot of sales when it comes to that particular holding, perhaps I want to think about selling out of that particular holding. However, this is the very first spot I come to because I want to know what insiders are thinking about their companies. Now, I can rearrange this entire list, which you're going to see me do here in a second. But again, it is all about trading with the insiders because they have the most knowledge on their particular company. So if you're a CEO and all of a sudden you're selling shares of your company, chances are there may be something on the horizon. Maybe it's the economic environment in and of itself, or perhaps just insider news that you know about that you can't release to the public. So you're going to do one of two things. You're either going to buy more of your company shares in an informative buy, or you may sell out of your company shares if that news is not so positive. So what I like to do is I like to come over to transaction. I get my drop down here, and depending on what I'm looking to do, I'm going to either check off informative sell or informative buy. But for the sake of today's webinar, I will check off informative buy because we're always talking about stock ideas. And I'm going to go one step further here and go to insider ranking, get my drop down. I always like to say that I invest with the best, as we all should be doing. So let's go with our 4 and 5-star ranked insiders. These are how well they're performing in terms of trading in and out of their stocks, their company's stock. Now, I can get even more specific, but I'm going to leave this pretty general for today and allow each and every one of you to jump over to this tool if you want to get more specific. But if we went over to sector and got our drop down, we can actually choose the sector that we'd wish to jump into or have this list filtered in or out of. But just having this list now in front of me, again, these are all informative buys that have just happened of insiders ranked 4 or 5 stars. I now have a running list, 3 pages worth of insiders who are buying their own company's stock back. And I get their position. So perhaps if I'm looking at the first opportunity here with Justin, understand that he's the president and CEO of Nickel 28 Capital. So the question becomes for me here is, well, what does this company do? And why may Justin, the president and CEO of Nickel 28 Capital, be buying more shares of his company? So I can give the ticker a click. I go over to their stock analysis. I always like to go to a year out. I see they're down on the year. And I can begin my due diligence. And just to give another example, again, we have insiders 4 and 5 stars, keeping to informative buys. Scroll down our list. You can even hit the next page. And we have a managing director with David at Cooper Energy Limited. Give that ticker a click. Stock analysis, and we do our due diligence. Now, are these stocks just because insiders buying or selling in and out of them, stocks that we immediately should jump on? Absolutely not. And that is certainly not what I am sharing with each and every one of you to do. However, what we do see from time to time, and what I certainly saw as an example last week, I'll take you right to the stock page of Devon Energy. Just the other week, we had the CEO of Devon Energy actually buying more shares of the company. Now that came up last week as I was taking a look at these daily insider movements, and it certainly made me add Devon Energy to my watch list to do further due diligence and understand what's going on in terms of their recent acquisitions, in terms of their dividend that just got slashed by a bit. But the whole idea is that I need stock ideas, or for the positions that are within my portfolio, I want to make sure that the insiders are at least buying more shares of those positions. And if they're selling out, why are they selling out? Can I paint that picture for myself? So that is the very first tab that I go to, the very first tool that I pick up when I come to TipRanks, simply because I want to make sure that the investments within my portfolio are solid investments that the insiders are actually favoring and not selling out of. Now, months back, we had Elon Musk, which I'll go to Tesla really quick, to insider trading, transaction, informative sells. We had Elon Musk selling out of his position there with Tesla, just offloading shares. Of course, this does not mean that the fundamentals of Tesla are necessarily bad, but it should prompt a question for every single investor, and that is, why is a CEO selling out of shares of his company, his or her company? That is incredibly important to note. Yes, this was happening during the time of the Twitter acquisition for Mr. Musk. However, that is a question and a cause for concern when you see a CEO, someone with the most knowledge on a company, selling out of his or her company. And likewise, when a CEO or someone in that C-suite wing is buying more shares of their company, that prompts a green flag for me to begin that due diligence again and ask myself those questions as an investor. Is this an investment for me? Perhaps a solid investment now for me to double down on, because those insiders who have the most knowledge are doing exactly that. I'm going to go right back up to research tools. And I want to go to underneath top stocks. We have top insider stocks. And I want to click on top insider stocks here. Now, again, we all know insiders, those who are in the C-suite, those who are just insiders of the company's directors, perhaps those who actually have that insider information on a particular company. So big players like hedge funds. We will immediately be brought to this page here, Insiders Hot Stocks. Now, right off the bat, we have various strategies for all of us investors to take a look at. We have transaction strategy. We can see here, that is just when overall there's that trend of transactions happening within a particular stock. Now we have C-level strategy, which is when we have our officers, only the officers, buying in or out of their stock. And then we have major event strategy, which can come down to larger institutional investors. Then we also have the top ranked strategies. So those would be essentially the top performing insiders, whether that be the institutional investors or the insiders coming together, the top ranked movers and shakers when it comes to that specific stock. Now, I always want to make sure that I'm pegging this information to something, in our case here, S&P 500, to see how it's performing against the overall S&P. Now, right off the bat, I can see that major event strategy, in comparison to the other strategies that we have, is doing incredibly well, delivering through on 8.02% an average of a return. That sounds pretty solid to me, especially when I factor in that the stock market returns average 7 to 10% for the course of a year. So I want to continue to run with major event strategy, and I want to scroll down. And because I'm running just with major event strategy, I want to make sure I uncheck C-level strategy, transaction strategy, and top rank strategy. Again, that is simply because I'm taking a look at major event strategy and its performance in comparison to the other strategies when it's pegged to the S&P. And I scroll down, and once again, we are seeing another opportunity for all of us investors to generate more stock ideas based on what insiders have been doing. So we can see right off the bat whether they're buying, selling, insider activity that is occurring. But we see most importantly is when these transactions were happening. when movements were happening with inside the actual stock. And we have these trends being set as of yesterday, 2 days ago, 5 days ago. But again, being another opportunity for us to generate stock ideas, this is where our due diligence can begin. Now, I can rearrange this list, just given our economic times. I perhaps want to make sure that this is organized in terms of larger market capitalized companies. Now, this is just for me as a specific investor that I am, a longer term value investor. I'm not so interested in smaller cap companies, like to sleep at night, if you will. But now I have, again, this list that is rearranged in terms of the size of their market cap and insider activity that had been happening. And now I can go and do further due diligence. So as an example, I will click on the ticker Riley here, stock analysis on the year, try to understand here what this specific company does. It's a financial, B. Riley Financial. I can scroll down, get my company description. Again, just an area in which the due diligence is now just beginning to get a good understanding of what B. Riley is all about. Can scroll back up. Once I learn what B. Riley is, now I take a look at this stock chart and do my best to take a look at why this stock is down over 29% on the year. I can move over to, again, insider activity. We have an informative buy made by Chairman Bryant Riley here. See if any other informative buys have occurred. Another 9 days ago by a director. Keep going down this list here, but it looks like there have been a decent amount of informative buys that have occurred when it comes to B. Riley Financial. So again, this is the question. The big question is this B. Riley Financial now a stock that I should add to my stock watch list? Is it a stock that deserves perhaps an investment if it's fit for my portfolio? But it's all about painting that economic picture for myself. I want to jump back on the screen with everyone here. Now, we just had Federal Reserve Chairman Jerome Powell share with us yesterday a couple of different things. I shared that brief clip, but if you're anything like me and you watched through that entire congressional statements that he was making, Congress, and again today he'll be with the House delivering through on, I'm sure, more hawkish statements. The economic picture that I am painting here for 2023 is rather nil. Now, I don't say that to scare anybody. I'm just being realistic and walking down this road worth of realistic expectations for myself as an investor. So in having that at the forefront of my mind when it comes to investing, I'm not so afraid to start to look at more defensive plays as an investor. And understanding that interest rates are likely to continue to rise, and understanding that Jerome Powell himself had just almost prepared us. He's been priming us really for perhaps a 50 basis point interest rate hike as opposed to the expected 25. The big question I'm asking myself is, well, what exactly is this going to do for businesses? How is this going to impact me as an investor? So I know right off the bat that 2023 is most likely going to continue to remain as an uncertain year with elevated inflation and higher interest rates. I do foresee more pain ahead, but why I am not troubled, why I'm able to keep a sense of cool and calmness as an investor is because I recognize that I have all the tools in front of me as an investor to invest with the best, to make those wise investment decisions. Now, those tools are all found right here on TipRanks, so this would not be another TipRanks webinar without me sharing with each and every one of you to check your emails. We are sending you a special email with a gift in there for everyone to take advantage of to make sure that you are investing wisely and safely in 2023 here to have a profitable year. Never invest without that due diligence. Don't invest without your investment toolkit. And I look forward to next week and the weeks to come, which March 14th is another big date. I hope to see everyone back here next week on Wednesday's webinar, if not on the Monday webinar, from taking full advantage of the gift that is coming your way. But investors, fingers crossed for all of us today. Jerome Powell's tone remains rather dovish, although I think it will be hawkish. Happy investing to each and every one of you, and I'm looking forward to seeing you all again next week. Thank you so much for tuning in, and I will see you next week.